Whoa, wait, calm down. I'm not a tax evader. I will not come knocking at your door.
Teen Wealth, Teen Wealth.
Hey guys, Teen Wealth here, and today I'm going to talk about tax fundamentals for students, small business owners, or investors. I am by no means a CPA. This is just financial tips and not advice. Okay, first of all, what are taxes? This always gets asked. So every year, the IRS, which is the International Revenue Agency, which is part of the government, in short, that takes away a part of your income that you earn from a job or a business.
It is not quite this literal. Tax money actually goes towards things like schools, hospitals, and more.
And depending on how much you make, you'll be put in different tax brackets.
It's tax time. No, I'm just kidding. But in all seriousness, people would always go up to me and be like, tax brackets. And I'm like, okay, like what am I supposed to say to that? And now that I know what it is, this was my face when I found out. So this is actually the tax chart or the tax amounts for citizens in the US for 2021. There's different versions like married couples filing separately, heads of the household, but just for our sake, we're going to generalize it and just look at this one chart for individual taxpayers. So basically you get taxed on the amount and income you're making. So this right here is the income. This right here is the amount of taxes you're going to pay. This amount right here is the kind of set fee, and this amount right here is a percentage of your income you pay.
So in short, the more you make, the higher percentage is going to be taxed on your income. But there's loopholes on this where you use something called tax incentives. These incentives are provided by the government, which basically encourages you to engage in certain behavior that benefits the community or the economy in some way. And then for that, the government will reward you and you can get a tax deduction. So number one, if you're going to college or university soon, or you're in it right now, you can actually write off the interest on your student loan debt. In the US, you can deduct up to $2,500 in federal income tax of the loan interest you pay during the year. So for example, if you're in the 22% tax bracket and claim a $2,500 deduction, the deduction reduces your federal income for the year by $550.
Okay, pause. So ignore this picture right here, but here at Teen Wealth, we actually focus on fundamentals and basics. So for my friends at home who don't understand, here's a breakdown. We've got 22%, which is the tax bracket of the maximum amount that you can deduct, which is $2,500. And then after we calculate that, we get $550, which we can write off when we file taxes.
Now you can go spend that money on a Gucci belt. Don't do that, I'm just kidding. But in order to qualify, the person who actually writes off the taxes must be the one who pays for the student loans, so most likely your parents. But if you or the student is the borrower of the loan, they can actually write it off as a tax deduction. Second of all, if you are self-employed, then you can actually write off your home office. So basically, certain office, supply, and phone expenses can be written off, which is super cool. And the same thing goes with your workplace expenses, including rent, home insurance, and hydro. Third is marketing and advertising costs. You can even write off partial Tesla costs, like vehicle maintenance and repair expenses if you use it for marketing purposes. So go just slap on your logo onto a Tesla and call it a day. Number 4, you may be eligible to claim something called an ITC, which is an investment tax credit. They let individuals or businesses deduct a certain percentage of their investment cost from their taxes. As for Canada, if you are eligible for an ITC, depending on your expenses for that year, you may be able to claim a refund on your unused investment tax credit. So this refund will reduce the amount of credit available to you for other years, and you can carry back the credit and use it up to 3 years and use it to reduce your federal tax. Alongside this is corporate tax credit, which is eligible technologies that use solar, thermal processing, heat, and really companies in the energy industry get to use this. Now let's talk about one of my single-handedly favorite things, real estate. You can write off things like the interest on your mortgage, which is single-handedly the biggest deductible expense. You can also write off depreciation on the property but not the land.
So if you don't understand what I'm talking about, I'm just going to go over what depreciation means. So basically, looking at this very funny graphic right here, it is a decline in assets value over time. So we've got this beautiful Paris Hilton kind of house right here. So the house itself actually will decrease in value over time, whereas the actual property will always increase in value over time and become more expensive over time.
Do not get it mixed up because land tends to appreciate and property itself tends to depreciate because of things like toilets or tiles cracking and stuff like that. And the cost of repairs can actually be deducted, like repainting, getting a new toilet, fixing those tiles, cracks, etc. And the insurance for your rental property can also be deducted.
Also, did y'all know I had a TikTok? Did y'all know I had a TikTok? I did not think so. It is at Teen Wealth. And funny story, I'm actually shadow banned. Please help a girl out. It's because I was liking my own posts. So basically, I do post short form content, which is kind of like these videos, but not as detailed, but it is short and brief. So if you guys want to learn that stuff, I am posting every single day for the month of March. So make sure you follow me there.
Guys, that was it. I hope that it brought you some value about ways you can learn to legally deduce your taxes in the future or even now. And I hope you guys give this video a thumbs up because it really helps me out and it helps with the algorithm. And if you guys want content on finance, make sure to subscribe. It's free. And I'll see you guys next week for more videos.